I think we'll see a V-shaped recovery. And again, this is a confusing thing. We're at the very earliest stages of a real-time recovery. It's a very sharp recovery. If we see a reopening of the economy remain open, then I think we'll see the second stage of that recovery into 2021. But it will take a while before we can get back to the levels of both GDP and earnings that we saw in 2019.
You're underweight equities amid valuation concerns. What would it take for you to change that opinion?
Well, I mean, in a sense, we don't want to wish that the equity market got cheaper. I think a more confident V-shaped recovery would be helpful because I think markets are looking forward now to 2022 earnings or even beyond, so they're becoming very long-term. Yeah, sure. If equities got a little cheaper, we'd be definitely more interested. But I think the risk, the health risks diminishing, and certainty that the reopening is going to continue would probably get us back into the market as well.
You prefer credit to equities. Whereabouts specifically?
Well, investment-grade credit, we're actually long of investment-grade credit. We've got a little bit of position in high yield as well, but we are quite cautious, so that's not a big position in high yield. Investment-grade credit really is a more solid position. We think the risks are well described by markets. We think we've got default risks that are substantial, but when we think about liquidity and solvency position, we think the spreads are rewarded well, and it's a little bit of a hedge against being underweight in equities as well.
The US dollar at a 3-month low, does this alter your investment strategy, and what does it mean for the emerging market space as well?
I think it's certainly helpful for emerging markets, and local currency emerging market debt is an area we're very interested in. We've got a long-run kind of disinflation story in many of the emerging markets. FX markets have really overreacted. We can understand why at the individual country level, but overall they're cheap relative to the dollar. And I think the dollar weakness we've seen in recent days is helpful to that position. I think it's a long-run position in the sense that we should expect a lot of noise, and I don't think the dollar's a one-way bet at the moment. I think it's still got a safe haven status.